Team.
Hi everybody, I'm SUJAN presenting our group on accounting theory and current issues, and we have prepared the presentation on this topic, impacts of our IFRS adaptation on thinly capitalized Australian companies. And there are 6 members in our group: BINAYAK, TIWARI, Bijaya, Timilsina, UMESH, GHALE, NOUMAN, RIAZ, SURESH, ADHIKARI, and myself, SUJAN BHUJEL. And my topic is introduction on that companies. So, identifying the impact of the reporting standard at international level on the capitalized position of the companies or reporting entities conducting their business in Australia. This IFRS was introduced in 1st January 2005. Then after that, all the companies that were in Australia, they adopted this system, and which impact their accounting system. And it was helpful because the companies would help in facilitating comparison between the reporting standard and improving the transparency. The different companies had different accounting system, and the different accounting system were used in different countries. So to make it the similar in all the different countries, this system was made. So the companies which are using IFRS are having the similar accounting standards in their accounting. So the next is adopting the thin capitalization of firm is adversely affected by the adaptation of this IFRS in the companies. And Australian corporation operating in Australia are considerably impacted by adaptation of IFRS. That's all from my topic. The next will be NOUMAN.
Thank you, Susan. And myself, NOUMAN, and I would like to explain about the implication of the adoption of IFRS. The divided decision of the reporting entities was phenomenally impacted by the adoption process of IFRS on 1st January 2005. The reporting entities complying with the rules of thin capitalization under the general accepted accounting principles. The principles would fail the test due to the alterations in the accounting treatment in respect of valuation and recognition of liabilities, assets and equities. This was explained in the article of Liu and Warfield in 2014. It was pointed by Institute of Chartered Accountants in Australia that significant amount of time would be required for assuring that reporting entire would not be worse off compared to the situation before the adoption of international standard. That's all from my side, and now I would like to call Umesh.
Hi, my name is Umesh. Today I'm going to present about the adverse impact of IFRS adaptations. There are 3 main impact of IFRS adaptations. Number 1, the consumption of thin capitalizations of firm is adversely impacted by the adoption such as standard. Number 2, denying on part of organizations is relations to income tax deductions concerning borrowing fees and interest payment. Number 3, there can be increase in compliance cost for the firms within the capitalizations. Now I'm calling to Bijaya.
Thank you, Umesh, for inviting me. So, hi guys, I'm Bijaya Timilsina, and today I'm going to talk about the significance of IFRS adaptation to entities. So, what IFRS does, it helps to know the relationship between the capitalization and how it is impacted by the standards. And the next benefits we are talking here is by the use of IFRS, it helps comparing the financial statements of different entities in both national and as well as international level. Also, it helps to link the initiatives of accountings and the taxation policies as well. And the final significance I'd like to talk about is the adopting IFRS means the opportunities of the career mobility of the professionals, as if they want to move from one country to another, they know the rules and regulations of the accounting standards, they can move it on So that's for me. I'd like to call my friend for the next slide. Thank you.
Thank you, BC. I'm SURESH ADHIKARI. Now I'm going to present on my topic, the impact of IFRS adoption. There are three main impact of IFRS. The first one is it declined the net position of entity and position of companies in terms of net assets and subjected to change due to the volatility. And the second one, reporting the higher amount of liabilities and assets due to the provision laid down by the IFRS. And the last one, it change in accounting treatment of assets and liabilities. Thank you. I want to call BINAYAK.
Great.
Thank you, Suresh. I'm TIWARI, giving you the conclusion part. The first one is the adoption of IFRS on the selected samples of the 105 Australian listed companies have been quantified in relation to interest bearing liabilities and computing the waived amount range as a safe harbor. And the second conclusion is the provision under IFRS in terms of fair value accounting have the implication in the reducing compliance cost and the thin capitalization positioning of the firms. And the last but not the least, the conclusion is the provision of thin capitalization as introduced by the IFRS is likely to facilitate the comparison between the thin capitalization position of firms across several jurisdictions. Thank you. And that's the end of our video presentation.